Hi, everyone. Welcome to this webinar on maximizing benefits from lower interest rates. Sri Lanka has had an economic recovery that has been nothing short of amazing. We are now entering a period of low interest rates, some economic stability, lower inflation, and what we're here today to do, understand straight from the decision makers, from the leaders in the banking industry, what exactly you can do to benefit from the lower interest rates, how to get these business loans, understand credit evaluation and credit scoring, understand eligibility for home loans, and for to understand what is going to be with interest rates going forward, how to manage your foreign exchange earnings, to how you reduce your tax payments using loan payments, and finally, how to reduce taxes from future investments. And today, to help us deliver this message, I would like to introduce us. We have Mr. Nalin from Pan Asia. He's the CEO of Pan Asia Bank. We have Asiri Damagoda from DFCC Bank. He's the Senior Vice President of Retail and MS and Small and Medium Enterprise Banking. We have Hazrat Munasinghe, who's the Deputy General Manager of Retail Banking and Marketing from Commercial Bank of Ceylon PLC. And we have Tanushka Jayasundara, the Group CFO of the Janashakti Group. And myself, CEO of lanka.tax, I will function as your moderator. Before we begin, I would like to thank our speakers for being here, and a big shout out to our sponsors, our print media sponsors, Daily and Daily FT, for their wonderful support as print media sponsors. And obviously our partners, SLASCOM, Sri Lanka Association for Software and Services Companies, as well as the Rotary Club of Colombo Uptown, which is partnering under the pillar of growing local economies. Yes, and without any further ado, I would like to invite our speakers to start straight in with the questions. My first question to Nalin is, could you explain in simple language, please, the future of banking liquidity, interest rates, and the scope for individuals to take loans over the next 6 months?
Right. Thank you, Mahesh. Superb topic you're having. And also good to note that there are good IT professionals still in the country and and joining this meeting, as well as another set, as you have mentioned, freelancers. Good topic, and maximizing benefits of lower interest rates to these maybe young, mid-age people. So these are very good innovation. Thank you for that. So I think in simple terms, let me tell you what banking liquidity is. Now, what banks do is basically they accept deposits from customers and lend those monies. So to lend monies, you can't have a deposit of 100,000 and lend 150,000, right? So banks liquidity is you need to have deposits to lend, right? So right now, what has happened in the industry is basically we have more deposits. There has been very nominal demand for credit. The reason being in coming down, and also we see a lot of demand for credit. So there is ample liquidity, whether it's LKR or USD. The banks have enough liquidity. In fact, if you look at today, I happened to go to the CEO's meeting. There was a presentation. I will just tell you the large banks have a average liquidity levels have to be about in the region of 20% for banks, but now they have rocketed up to 40%. Right, it's double. So that means there is enough liquidity in the market, and if there is good lending opportunity, banks will lend. right? And of course, with regard to your second question, with regard to interest rates, let me read from the presentation today in the CEO bank CEO's meeting. A further decline in market lending interest rates is expected in the period ahead, right? So central bank is expecting IT professionals and also the freelancers looking out for lending opportunities, right? And your final question from me was the scope for individuals to take loans. Now, yes, there was now if you look at it, as banks, we we were a bit worried with regard to the lending to the retail segment because the purchasing power of individuals has come down substantially, right? Because the living expenses are high. If you look at it, electricity bills are high, right? There are the living expenses have skyrocketed, right? Therefore, the banks have are yet to align to this particular situation, and we are still, we are not very comfortable in lending to retail segment. But on top of that, we see a lot of people taking loans and suddenly going abroad, right? Which is a big question. Now, if you look at it, if you must have seen yesterday in the Kandy the immigration office where they had gone to get passports, there were thousands of people, right? So there is a bit of a issue whether whether these people, the people of the country, are still trying to stay in this country, or whether it's a stable country to stay, or whether to go abroad. So banks are in two minds right now. If a person is not properly employed, whether we could just go ahead and grant facilities when there is a probability, when there's a probability that many of these people who have skills and educational background is trying to move abroad. So these are issues. But saying that, banks are also, right, we are looking at it in a very positive way, in a challenging way, because banks also cannot wait without lending. You can't be having excess funds forever. You can't be now. If the excess funds have to go to treasury bills and bonds, those rates are coming down substantially. We can't keep those funds, so we need to lend. So we will look at any opportunities if there are good guys. If we feel they are good. Anyway, we'll discuss how the crib scores happen. Yeah, in this particular session, we'll be discussing how the credit scores happen, right? So we'll discuss that on how best IT professionals and freelancers can get facilities from banks. So that's it from me. Let's go ahead.
Thank you, Nalin. That was very clear and concise. As a follow-up to this, because we mentioned IT professionals and the unique nature of what has happened recently, I would like to ask Asiri about the different types of loans available for business owners, and what can you do to help them understand which option is best for their needs?
Thanks, Mahesh. Good evening, sir. Or if you take the IT professional, who is, when we take IT professional, we most probably will consider them as /com affiliated, working for a /com affiliated company, right? So two different things. Here, the person who is affiliated to the /com company, they're going to be salaried, right? So we will definitely look at what their salary is. Also, we will also look at which company they're working for. So the strength of the company they are working for will matter when they're going in for a loan. And I would think that when you say products, especially when it comes to a /com affiliated company, we would think that these loans that they take, these will be for personal use, right? So it's very important. So we will break this down into personal use. If it's personal use, definitely we will need to look at their cash flows. I mean, for even a company, we will look at the cash flows. We would look at their crib scores, because I think we have a very good grip in Sri Lanka. We would look at how they have behaved in the past, how they have borrowed, how they have repaid. All those things will come into effect. Then, of course, the need for why they are borrowing will also be looked at. So these are the areas that we will look at if it's a personal need. So if it's we say a freelancer. So when it comes to a freelancer, I think the thing that we will mainly look at is why they want the money. Is it for, again, personal use, or are they going to put this money into the business? So basically, working capital. Again, this all will revolve around their business and also their cash flows. So I think the advice that I can give them as a banker is that uh, your cash flows need to be documented, and I would recommend them to use the cash flows or get the cash flows through a banking system so that it is official, and then they can prove it that this cash is coming. So then it makes it so much easier for a bank to evaluate them, right? So the whole purpose for a bank, any bank, I would think, is evaluation of the cash flows of the person who is borrowing, how they are going to repay, do they have the capacity, and of course their previous history of how they have behaved or used the money which they have borrowed before. Uh, so that's in sort of a nutshell. I hope I have answered the question.
Yeah, Asiri, thank you very much. That's very clear. What I would like so I'd like to just pick up on that and then ask Hazrat a follow-up question. See, a lot of these IT professionals are now being employed by foreign companies, right? Whether it is a branch office or the same named company abroad or their own, how should a foreign currency earner build a relationship with their bank in order to be able to obtain loans?
Thanks, Mahesh, first of all, for inviting me for this forum. If I may take from what Nalin and Asiri said, first we need to understand who the customer is, what his involvement in terms of the profession, whether he's a freelancer. If he's a freelancer, then the way we look at it is slightly different to if he's a permanent staff member or a fixed-term staff member of an organization. Then we need to see if this customer, if I may call them the IT professional, if this company is based in Sri Lanka, whether it's a foreign company or not, whether the company is based in Sri Lanka or in foreign currency. So these are some parameters that we need to look at. And from there on, then we can decide, okay, for foreign currency, because if he or she is earning in foreign currency, he or she can go for a foreign currency loan. But we need to look at the CRIB scores, how they have performed in the past with their credit worthiness and their credit history. Also, we would like to see his or her term of contract agreement. Are they on pure freelance basis, that is piecemeal basis that they earn, or whether it's on project basis, or are they permanent employees? So as Asiri explained, well documented credit history or earnings history is important. Whether it is a loan in Sri Lankan rupees or foreign currency. And more importantly, we would also like to see about his agreement with the company, which kind of a contract he's on. But yes, if I may answer your question in a nutshell, he or she is entitled for a foreign currency loan, provided he or she satisfies these requirements.
Thank you for that, Hazrat. I think that was very clear. Since the webinar is actually for IT freelancers as well as IT professionals who are employed, perhaps, Tanushka, you can clarify to us a little bit about the differences in funding that is suitable for employed individuals and how that contrasts with freelancers who are essentially small business owners.
Thanks, Mahesh. I think I'll start with what you said earlier about the economic landscape, about stability and stuff. You mentioned some stability. I think you're trying to maneuver the political environment carefully. But I like to think there is some serious stability that is there in the country, and I agree with what Nalin said as well. There is excess liquidity in the system. I mean, we had about 200 billion deficit about not long ago. Now we are at 100 billion excess, and FCY liquidity is also the same. So the stability part is true, and taking up from what Hasrat and Asiri said, if you're a freelancer, the banks are going to look at your history. They will look at what your CRIB scores are, how long have you been in the bank, etc., etc. But where it becomes a chicken and an egg situation, because when countries are poor, you sell labor first. That's the only way of making money. You sell labor. And as you advance from poor to middle income category, which we are at the moment, you start selling knowledge. You transfer from selling labor to selling knowledge. We are in the middle income category now, and we are showing signs of getting into what we call a middle income trap. And how you move out of middle income to a wealthy nation is you transform from selling knowledge to selling capital. There are three types of capital involved. One is the actual liquidity capital that you can take out. Other one is brand capital. Other one is knowledge capital. So the segment that we are discussing now about freelancers, IT professionals, or any other technocrat or bureaucrat who has the capacity to transform from selling knowledge to selling capital, we need to have a system built to support them. Otherwise, we are going to get stuck with what you call a middle income country. And unfortunately for Sri Lanka, we don't have concepts like Shark Tank. In US, it's a very, very popular thing. And Shark Tank was a copy of a Japanese program called Dragon's Den. We don't have that kind of programs in place. So we need to figure out, not just as IT professionals only, even the entire financial intermediation industry needs to figure out how are you going to fund these guys, because these guys have to take the country forward. So if you are a freelancer, if you are anyone, not just a freelancer, anyone for that matter has an idea, you need to figure out what is my first step of entrepreneurship to transform into a business. The first step is to find capital, right? So there are two forms of capital at its very basic sense. One is equity capital, the other one is debt capital. If you are starting a business, transforming to sell capital, I think we need to be mindful that the first couple of years will be difficult. First couple of years, you will have a strain on your cash flows. First couple of years, you will have a strain on your profitability. And if you're already on debt for your capital, your strain becomes even more. Right? So at a starting point, if you can raise capital, that would be the best form of capital that you can inject. And as your organization grows, I mean, there are stages of organizations that you evolve onto. You start off at a startup, then you move on to growth stage, then maturity, and then you decline over a period of time. Starting point, it should be equity. And then once you move on to the next stage, you can look for that capital. In our context right now, interest rates are coming down. Interest rates have come down. And when interest rates do come down, what happens is your cost of equity also comes down along with it. Because all of a sudden, what finance guys have a term called systematic risk. Systematic risk is the risk of the environment that you're operating in. When interest rates come down, your systematic risk also comes down. As systematic risk comes down, the premium that you pay for equity over debt also comes down, and the margin thins over a period of time. So in an environment like this, I would advise anyone to go for raising equity should be your first choice. Try and get some form of equity at a lower cost if possible. There are many, if you are looking at a large scale business right now, if you exclude the multilateral lenders like ADB, IMF, IFC, etc., they may still want to wait until the country credit rating is upgraded from default. But all the other fund managers, DFI lenders, they're willing to come into Sri Lanka and lend money. So you reach out to those guys and see whether they can take stake and equity stake in Sri Lanka in your organization at the moment. Then as you grow over a period of time, your market share increases, your sales coming through, your cash flow becomes positive, then go for debt capital raising. Because debt, it's a feature of debt is you ask Nalin, you ask Hasri, they'll always say you have to service your debt on a monthly basis, at least interest cost, right? Without that, they're not going to like it, because they also have a regulatory framework named Basel III that puts them into trouble if people don't service their debt. So as you move along the curve of your organization journey, move into debt capital. I assume, going by the audience that we are going to have a set of individual freelancers who would want to start their small startup at a very much more minute or a smaller scale. For those guys, we have a term in finance called what you call bootstrapping. Bootstrapping you can do in two methods, or you can be creative in your own as well once you understand a little bit of how capital and finance markets work. If you have a deposit, let's say at least a million or 5 million rupees, go to one of the primary dealers. Sri Lanka has 8 primary dealers. Ask them to bid at the next bond auction on the long end of the curve. Buy a 10-year bond or a 5-year bond, try and like that, and get it at a higher price. I'm assuming here that the yield curve is upward sloping rise. Your short-term interest rates are low. Your long-term interest rates are very high. Make sure that the gap between the long-term rate and the short-term rate is significant enough for you to take this position. You go and get a long-term bond. You're going to earn interest on your saving. Keep the same bond as collateral and borrow on the short end of the curve. So your interest cost on the long end of the borrowing and the short end, long end of your investment and the short end of your borrowing is going to net off. Use the borrowing to fund your business. Another thing that I can suggest is use your life insurance portfolio. Life insurance companies, your maturity benefit is not taxed in Sri Lanka. Start building equity on your life insurance portfolio. Start saving. If you save in a bank, your interest income will be taxed by the government at 30%, right? Depending on the bracket that you fall onto. But if you save in a life insurance company, your maturity benefit is not taxed. What you can do is you can tell the life insurance company to keep that maturity benefit as collateral and lend you money to it. Then the documentation part for these two processes, which Nalin and Asir and Hasrat is going to talk about, is not needed anymore because you have built a portfolio of equity for yourself. And you do not have the record. You don't need to have the record. You don't need to have the background checker, etc., etc. You're funding your own business on your own over a short period of time, because your startup will be the most difficult time period. It's going to be emotionally draining because it's a big risk you're taking. You're going to go on your own. It's your money, it's your time, it's your youth. Probably you're in the prime of your life, and the forever pertinent question of, am I doing the right thing? Am I doing the right thing? Will I fail? What if I fail? All those questions are going to come into play. And the last thing you want to is, when you're going through that time period, bankers calling and saying, hey, pay up your loan installment. It's going to be an added burden for you. So first 2 years, try to finance it on your own or get some equity from someone. Pitch your idea, pitch your plan, pitch your new product, innovation. Try to go on equity as much as possible is my advice. I hope I covered the question, Mahesh.
Thank you, Tanushka. You did very clear to us the difference between a freelancer, and I think I enjoyed the part where you touched on how a corporate executive who is looking to start their business could self-fund it. And I just want to add on that, right? It's important to understand that debt is not all bad, right? Interest payments are not bad. We are investing in a productive asset or in a in a marketing program that may give you returns. The key thing to remember is that bank interest cannot be paid in promises, right? Or in potential. You can't go to the bank and say, we have such high potential, give us the opportunity to pay you in potential. You need cash. So I agree with that. Now, the benefit of debt is a big benefit, which is that any expense incurred on debt as a freelancer, you can set off as long as you can prove the funds were used for business purposes. So it goes back to what Asiri, Has, Nalin all very, very clearly brought up. You have to use the funds that you obtain not to migrate, not to buy a different asset, but for the purpose that you promised you would use it for. And I don't want to take much time, right? But remember this, if you incur an expense, it reduces your profit, which means you pay less tax on your profit. So there's a big difference between revenue and profit. As a freelancer, you need to remember that difference. It's quite often forgotten. And I'd like to ask actually our entire panel, if our panel could please turn on their cameras and come on so that we could ask a few general questions and have all of them contribute, right? So for a freelancer, what are the types of loans that they should be looking at? And how would they, how is that different when compared to an employed individual?
You want me to take it?
Yes,
Yeah, I
please.
think when it comes to the need, I think there is, just because they are a freelancer, that doesn't mean they have different needs. I mean, if you take them, especially when you take the individual needs, I would expect them to have the same needs: to build a house, buy a car, children's education, credit cards, personal loans. So I don't think the needs will differ unless it's to do with the investing back in the company or something that they want to do within the framework of the business. So the need is not different. Only thing, as I said before, is that when it comes to a freelancer, we are having a hard time. Maybe Hasrat and Alina also can second it or not. That at the moment, the freelancers, the difficulty that we have is the looking at their cash flows, because some of them tend to take the money in different ways. It doesn't come through the banking system, so we don't have enough data or information to make judgment on their actual income. So that's where we have a problem with the freelancer. So I think the advice on the freelancer is that whatever income that you're making, try to send it through the banking system so that we as banks can figure out how strong they are, what actual their cash flows are, and it makes it so much easier. Because whatever said and done, I know banks ask for security. I mean, we ask for security for a different reason, to also see that they are also serious about why they are asking for the money. We actually don't want to go behind security at all, because we also have to take it and sell it back. So it's not that we are looking for security as much, but we just want to know the person who is borrowing has the capability of repaying, right? So this is a very basic thing when you're lending money. So just show all the income that you can show in your business or as an individual, so that it makes it easier for us to make a call. That's what I have to say on that side.
Thanks, Asiri. Nalin, Hasrat?
Yeah, let me chip in. I think Tanushka brought in a good point. If it is a business loan or a freelancer, if you are looking at a startup now, equity, we expect as banks. I'm just mentioning what the banks think, right? So equity is actually, we look at about 25% of that particular project cost that the bank will lend up to the balance 75%. So this is for the information of the audience, right? That is how the banks initially look at it, for even for anything like, even a project financing, a large scale project financing. So similarly, for a startup, we will, because the thing is, when somebody puts his money, only the commitment comes. That's what the banks think. At least some money has to come when you are starting our business. Now on top of that, there are some credit related acronyms, right? There is a thing called Campari. Campari is, C is for character. Character means you can't just look at a person and say, he's a good person. No, we look at his qualifications, his skills, his track record. So character, that is, C is for character. Then A is for ability to do this particular business, ability. Then M is for whether he's taking a margin out of this particular project, whether he's getting a profit. You can't just do business and make losses. Your standards must improve. There are people who are starting businesses, and their standards are living up, going down. We don't want that. Then the purpose, whether that purpose is in line with his skills, right? His profession, whether he's trying to do something aligned to his qualifications. So that is one thing we look at. And then the amount. You can't, when you are starting up a business, you don't give up for a freelancer. You don't look at 100 million. Can you look at 100 million? No, right? So you must also be reasonable. There are amounts which the banks know, right? Then the repayment comes in repayment. Now for that only we ask for the cash flow. And finally, as my colleague from Asiri from HNB said, yes, we are looking at collateral, right? If it is tangible collateral, if it is a property, the chances of getting that loan is much more, right? But if it is not property, but you are a qualified guy and you have shown your skills, you are in the market, you have started up you have given a good solution. Maybe you are given a good IT solution, and we know that, say now a thing like board pack, right? Board pack is now, I heard, it's one of the biggest even in India, right? Built by a Sri Lankan company, right? So they now when a person has done something like that, people will come because they have shown, right? I have shared some documents with Mahesh, how we find a really genuine quality credit guy. There are algorithms, right? All sorts of things have now come in, right? There are credit scores, how we do this, and also now there is the CRIB score, right? For people who don't know, Mahesh, can you share the CRIB score I have shared with you?
Yes, this is the one moment. Yeah, we'll.
Yeah, I want you guys to see how the Credit Information Bureau gives a score to a person. Now look at this. These are all AI things, right? If a person pays his credit card in a good, not that, go to the previous one. Yeah, that's fine. Yeah, right. Yeah. Okay. Yes. Now this is a CRIB score. If a customer comes to our bank or any other bank, we will first call for a CRIB report. So look at this. This is one of our customers' CRIB score. So he is having a 611. This is actually is a very A3 is one of the, you can see how he has improved. If you go down from C1, no, well, yeah, from C1 over the period, these are periods. So C1 to B2, C1, B2. Now he's at A3, right? So he has been paying, maybe he's having only two, maybe a credit card or a loan, right? Or single loan. But when you look at this, and you can see what are the scores, like A1 to A3 is very low risk. So this is generated by the Credit Information Bureau of Sri Lanka for any person who is having an identity card, right? So you can see how, so if you can just go up, now this person A1 to A3 is very low risk, right? What I'm trying to say is, even if you have a credit card only, and if you pay it on time on the dot, if you will get, this person has got an A3. Go down, Mahesh. Yeah, I just want you all to know how we analyze. Now see, if you are a prompt repayment master, it will be very low risk. And if you are not doing that, your ratings will come down substantially. Low risk, average risk, high risk, very high risk. If you're not paying on time, so that then from that, it's from once we get this CRIB score report, right? From that time, if for this particular person at A3, we will not look at a property. We know this guy has been paying even his credit card on time. It shows that he's a methodical person.
Right.
Right.
Very important.
Yes. So very important. So can you just go to my other one? I
Yes.
don't know what I'm taking time, but I just want
No
to show
problem.
you.
Just give us
Yeah.
a moment.
I just want to show you few things. Right. Now this is with regard to your repayment past track record. Now then, if you are coming for a facility, a bank will give you a score. A bank will give you a score. This is not based on your track record of your existing loans. Is it on, Mahesh?
Yes.
So yes. So just look at this. I'm just showing a credit scoring matrix for you all to learn, right? So age matters, marital status matters, whether you're having a residence, whether it's owned, rented, then a vehicle, contactability, professional academic qualifications, employment. Now employment. Now this is a question here, whether you are a freelancer or employed, but that has only here, that has only 8 marks.
Right.
Only 8 marks out of 100. Right? But if you score well in others, say designation grade, the number of years, okay, again the employment comes in. So employment has something to do here. So maybe two items, but status of spouse, monthly income, existing card limits, performing an existing cards account, relationship with PA, and then the recommendation. So there are credit matrices. So how this works is, now out of this you get a score. So that's how this happens. So it's ideal that a person has, other than his credit history, which comes from the CRIB score, a person also, this is that is why, Mahesh, I'm showing this for people to know these are the things that a bank, maybe different banks have different things, but this I made it as a general thing. I got some inputs from this is for a personal loan or a credit card, right? So similarly, with regard to a project, there will be different things, but this goes even for a housing loan, a vehicle loan, a lease, right? So these are the things banks look at. So I think it's very important for people to know why these are important when you're going for a loan.
Thank you, Nali. I mean, that was super enlightening to see. I think a lot of freelancers here are going to be very glad to see that they need that it's such a small portion of the entirety of the credit evaluation process. And I don't think most people have seen even the credit report from CRIB. So now they understand the level to which they are being tracked.
Actually, Mahesh, a person can go to his bank and ask for a CRIB score at a fee. It's not a big amount. It's about rupees 500. I don't know whether it has been increased recently. but a person can ask for his crib report from a bank, and you will
Okay.
get the score. It is a nice one. Your entire score comes in a graphical mode, right? It's a good one to see. Everybody should have access to the crib score and keep it filed with you. It's good.
It's certainly very interesting. I just want to quickly share a little data that we collected from all of the registered participants. So just want to know if you all can see this graph. There are 3 pie charts here. Right. So essentially corporate executives, 63% of corporate execs and 60% of freelancers want to take loans. And 80% of business owners are keen to take loans. I think we've looked at the credit evaluation process, and Asiri touched on the requirement of security. So now I would just like to bring up, how your cash flow based loans would be evaluated for, let's say, a business owner. Other than, sorry, so just to clarify, right? I understand you went through all of this, but often, particularly what bothers me is this parata execution, right? Because quite often people pledge their personal assets in order to take business loans, right? So how will that work, and how will, let's first deal with how that lending typically happens.
I think, okay, let me chip in for that. I think why we are asking for a cash flow is to see whether that person knows how to handle that business. That's it. We don't want, what we are trying to do is a person should know his projected sales, right? His projected expenses, and what are his overheads, right? A person should know these things. But we don't want exact figures. What we are trying to see is whether he's skilled enough and he's knowledgeable enough in this business to forecast his future, maybe 3 years business. That's it. We are not looking at project reports in a huge way, but we just want to know whether if you are doing a business, what's your forecast. That's it. I think Tanushka will agree with me. These are things. These are not rocket science. We are trying to see in simple form whether he is focused, right? Whether he's focused, whether he knows what are the expenses are, what are his overheads, what are his direct costs. That's it.
Just to follow up on the matter of security, I think I would love if Hazrat Asiri, Nalin, Tanushka, if you all could kind of explain to us the implication of parate execution being suspended until December. I heard the cabinet approval was given. What is central bank doing about it? What stage is it at? Will it really happen? Could you please tell us a little bit about that?
So I think, I don't know, Nalin might be able to give us a better idea, but a little bit, we know it has been suspended apparently. So I'm not sure exactly how it has been told to us, but the little bit we also have checked, I think we also checked with a very senior government official recently. Yes, it has been suspended, but we were told it's only for SME sector. We were also told that it is not retrospective. So whatever we have started can be as is. So I don't know. So we'll have to wait and see exactly what kind of sort of a decision or a circular is issued, if there is going to be a circular issued. And also, anyway, it's a election year, so these things we have to bite the bullet and go forward. No? What to do?
Absolutely.
From my end, very bad move. Very bad
Yeah.
move, because
That's thoughts.
this is for this is actually only a set of willful defaulters have been asking for this, and by doing this, the good SMEs who are trying to get loans also will now the banks will think twice when you're
Right.
doing a facility. If it is 50-50, now we will not give, because now if a facility goes bad, we cannot go for action.
Yeah. And it's about, see, anything that has a price is a function of demand and supply. And banks set an interest rate for a particular facility based on the amount of demand they have and the amount that they can supply, right? And the competition takes into hold and they will arrive at a price. And in arriving at this price, they have factored in the security that is there. So now all of a sudden, if the government is saying, okay, you can't execute Parate, then as Nalin very clearly said, they are going to think twice. Okay, I don't have my cover. Should I be lending? Then all of a sudden the demand goes up, supply goes down. Banks will either start increasing the interest rates. That is going to have a ripple effect on each and every segment of the country. I don't know whether adequate thinking went into this decision. In the economics, there is no one single move to Mahesh. You do something, it has a domino effect on pretty much everything that is there in the country. I mean, you mess with the banking industry, it obviously has an impact on everyone, because every human being in the country has to interact with the bank. The moment you're 18 plus, whether you like it or not, you have to interact, no? And it puts everyone in a sort of a dilemma as to what am I going to do tomorrow.
10% of GDP.
Yes, 10% of GDP, 40% of money supply, and it's a big number. And just, I think banks had a very difficult couple of years, and just as they were trying to come out of, pull their nose above water, and this came in, this is a time that, as I said earlier, that we were thinking of, okay, fine, we're going to push for growth. We are going to come out of this middle income trap. And now each and every CEO in the banking industry must be thinking, what do I do?
Hazrat, we haven't heard from you.
Yeah, I would
I'd
go
love
a
to
step
hear.
backwards and explain a very simple explanation. That is, banks lend other people's money. We all know that, right? Banks raise deposits, and all of us, each one of you have bank deposits. So banks, what they do is they take their deposit and they keep a margin for costs, overheads, NPAs, non-performing loans, and they lend it back, keeping a net interest margin to customers. Right? So if customers don't pay their loans on time or in a structured manner, then the banks are not in a position theoretically to honor the deposits or pay interest. So people need to understand this, because if one side of the equation is not functioning well or partially even,
Yeah.
then it affects as Narushka said, it's a total ripple effect, right? Domino effect. It has its own repercussions. So I think we need to remember that. And banks do lend after careful consideration. They don't just lend for the sake of it, with all expectation that these loans will be paid in a reasonable manner during a reasonable period. But if it goes beyond the time, it's very difficult for the whole ecosystem to manage. So that's the very reason, or the ripple effect with this whole Parate matter is going to create. And also, interest is going to get accrued. So it's not that, it's kind of over and you pay it as and when you like it or when you can. The borrowers have to pay more interest. More they delay, more they have to pay.
So just on that, right? I'd just like you all as bankers to clarify what impact that will have on, does it have an impact on leasing? What is the impact?
No, there is no impact on leasing.
It's
Correct.
mostly on the business loans that has been given with
Parate is again
securities,
for property.
property,
Correct.
mortgages, and businesses. But as far as leasing is concerned, there is no impact as such. And leasing is doing well, though it's still the second-hand market. We see the leasing business picking up. People are still buying and selling vehicles. And then the leasing is thriving, and banks also have lowered their leasing rates to facilitate more leases being done. Banks offer lesser LTV compared to non-banking financial institutes, but still leasing is thriving, I must say.
And the suspension on, not suspension, there was another court rule, another thing saying you need a court order to seize a vehicle. How's that going to affect your leasing business portfolios?
I think there has been some misinterpretations on that from what I gather. What is required is earlier days, institutions used to get seizers to go and seize a vehicle on their own will. I stand to be corrected if what I'm saying is wrong by Nalin and Asiri. Later on, they brought in a rule that you have to go and lodge a police entry and then seize it. So there, what happened was the seizers used to go and lodge a police entry, and in some cases, in some parts of the country, the police used to accompany the seizers when they go to seize a vehicle. But the newest circular that has been sent from the IGP's office is that the bank itself, the financial institution itself, has to go and lodge a police entry, and then with that police entry, the seizers can go and seize a vehicle.
Okay. And does defaulting there, how are the NPLs? Have they gone up? Are they on the way down? Where is it?
NPLs, as you know, since 2021, NPLs have been rising, but it has come to a kind of a standstill or stagnated level since late last year. And we believe that the NPLs will come down with economic activity happening.
Nice. And what is your perception on the real estate market, and how do you think, because the eagle eye of the Inland Revenue watching over large transactions, especially to do with real estate and vehicle purchases, means that a lot of undeclared money is sitting still and not moving anywhere, hoping for a policy change. How do you see that impacting housing loan demand and commercial property demand, and what impact do you think it will have on the real estate industry?
My take on the real estate market, I see it is twofold. When it comes to land, especially in the suburban areas, I think it has come to a bit of a stagnant mode because I see an influx of people moving out of the country for good who's trying to sell their land and properties. So I think there's more supply than demand. And also with this government talking about this whole wealth tax and property tax and various other things, people are in wait and see mode. I'm not saying it's zero. There's no property sales happening. There is, but it is not to the optimum level, I would say. But when it comes to apartments and so on, which is in Colombo, in the city of Colombo, I think those sales are happening. And also there are quite a few apartments that are being sold. So I think those companies are doing various promotions and activities to lure people to buy apartments. As you know, the current economic recession, the widen. That's a known fact. So I think people who can afford would go for apartments.
Nalin, what's
Housing loans.
generally housing loans? Where do you see it going, and do you see property
I think
values going up?
we have seen a growth in housing loan demand because they were initially what happened was there was a cap on housing loan interest rates. So on that basis, the cost of funds was more than the CBSL cap right? So we were not encouraging much housing loans, but now it has come down. There is good demand. Housing loans will improve, and it's a good thing. I must tell our viewers, get a housing loan, because when you're young and when you start young, and when you have a housing loan, you have some commitment, right? When you have commitments when you are young, you also try to start saving. You know the limitations, right? So when you have something like that, finally you will be very happy once your loan is paid. You will realize that I have been young when I took this loan. Now I have a house, right? That will be an achievement, right? So please see that you all go for housing loans, because it's finally you all will end up being a house or property owner, and you will have a self satisfaction that being young and you have paid a loan, you are not uh, misspent your by younger day monies, right? So these are important things. One day you'll be very happy. Yeah.
Nice. And Asiri?
Yeah, I think chipping in after Hasrat and Aline, I think the housing loan book is also increasing for us as well. But I think it might be one reason also is that the country has stabilized and we are sort of moving forward. And the other bigger thing is, I think, compared to last year, the interest rates are much lower, right? So, I mean, last year we couldn't expect anyone taking housing loans at 20% or so. So now it has come down to more teen levels and might come down a little bit more even in the next 6 months. So yes, we are seeing a bit of a growth in the housing loans.
And also, Mahesh, housing loan
Yes.
installment is basically good for your tax as well. You can
Yes.
you can deduct your housing loan installment from your tax. So that's
So
another.
you were able to do that for a 3-year period from 1st January 2020 till the 31st of December 2022. They have now taken that out. However, if you are buying a property to rent out, I'll give you a simple example, right? If you're buying a property that you can rent out at, let's say, ₹1,000,000, 25% of that is anyway tax-free, because that you can claim that as maintenance. On top of that expense, you can further claim direct costs, like let's say you bought an apartment to rent out. That apartment, you can claim back your service fee or your maintenance fee paid to the management council. Any security fees on a property, if it's a standalone, right? Those sort of things you can claim. And then if you have a large loan that you pay using that cash flow, provided you have put in enough equity, you need to now start matching the rental income against your residual from that taxable income, so that essentially you're buying the apartment completely tax-free, right? We are having discussions with a lot of real estate, a lot of HNI clients, and talking to them about how they restructure their portfolio. So they're selling off fully paid off apartments and buying 2 units of slightly smaller value, increasing their portfolio from, let's say, 50 million apartment, they sell it by 240 million units and use the cash flow on the rental tax-free completely. So it's a beautiful place to make a tax arbitrage opportunity, where you're increasing your asset value over that period that Nalin explains. In 10 years, 15 years, you're done. You own that property, and now it's an asset you can pass on to the rest of your family. So one last quick question from me that I think is quite pertinent. A lot of people have unpaid tax dues, right, from the previous years where they were permitted not to pay their pay tax. Is the bank evaluating if the returns have been filed, not returns have been filed, if there are arrears of unpaid tax, because that could affect the ability of the person to service this loan?
I don't think, no, we are not considering whether there is tax arrears, because we as I said, we go by the crib scores, we go by the Campari, what I said mentioned before, So I think as also I want to mention this as responsible citizens. We also should make some commitment to the government as well, because this is a country which needs responsible people, right? It's for us. It's for us actually. Whether I don't know whether it's the worth, the value of it. I don't know whether there is value for it. But I mean, what I suggest is, we need to give something back to the place where we studied, where we have basically grown up. The country, beautiful country, where we need to be with this country and we need to build this country. So there is a social responsibility for us to pay the taxes.
Very true. Asiri is perhaps you and Hazrat could also just look at that, because if you have 3 years of tax arrears, or because see, official facts from the Inland Revenue's annual report, right? 300,000 people in 2022 earned over 250,000 a month. Of those 300,000 people, only 41,000 paid their taxes from their salaries, right? The rest of them have maybe 3 years, maybe less, but they have an arrears amount. Is that being looked at your bank?
Yeah, Mahesh, I think as Nalin also said, when we give a loan to anyone, we, regardless of this reason, these 3 years tax break they have got, we have never looked at their taxes. I mean, if someone comes, if you even go back 4 years ago, even we have never looked at a customer. We never sort of asked them do they pay their taxes, because I think we would expect them to be abiding by the law of the country. I mean, that is a given. So it's not our duty to check all customers are paying their taxes. So we don't and we have not looked at it. So definitely there might be a bulk payment for, in your case, nearly 250,000 people.
Right. Hazrat?
Yeah, Mahesh, it's the same answer. I mean, we don't check about the payment of taxes of customers. It's the rule of the land, moral duty for them to pay taxes, and it's Inland Revenue's duty also to collect it, get their systems up and running, and to make sure everybody pays taxes. But if there's a ruling, if there's a law as such, banks will certainly comply.
So an interesting thing from here, it's very important, I think, for the viewers to understand that that banking secrecy or the confidentiality is maintained, right? Under what situations do you share? See, with this whole new this TIN requirement for everybody, some borrowers are afraid that banks will share all their income sources with the tax department. And I think it's important for you all to reassure these borrowers about how confidentially you maintain their data.
The data in banks are strictly confidential, but banks are governed by the rule of the land and the regulator. So if there's a rule in the land to say the banks have to share certain information with any government institution, that has to be passed by an act of parliament and enforced through gazette and whatever necessary approvals, the bank will have to comply. If not, the banks will not share any information with any party unless an order given by a court of law, magistrate, under the current law of the country, that they would require banks to provide certain information. It could be a criminal case, it could be anything to do with anti-money laundering, it could be a case related to drugs, anything unlawful. And if there is a court order, then the banks will provide the information to the courts only. But other than that, the banks will not provide any information to any other third party.
So I think that's wonderful, right? They will provide only to courts. Nalin, Asiri, would you just confirm it's the same with you all?
Let me put it in a different way. Not only courts, Inland Revenue, even the banks will never give information voluntarily. If there is a direction only, the bank will give information.
Excellent. So we've run a little bit over the time that we had allocated for this. We have been asked in the, I'll just like to drag this on for 5 minutes more because there are some very good questions that Sahan has asked. He asks, can you please give your opinion on USD earnings? Where should we invest and save? Should it be converted to LKR? And or is holding dollars better in the long term? What's your opinion on that?
Good question.
So, yes.
It's, sorry, Asir, go ahead.
No, go ahead. No, go ahead, Ali.
Right. So if this question was asked 1 year ago, right, Sri Lanka was, we didn't have electricity, we didn't have fuel, right? I would have, as a citizen loving the country, I would have said, yes, convert, right? But now there is no need for conversion. We have enough dollars, right? So you can keep the dollars, but be careful. The LKR is appreciating, so be careful. Yeah, but now you have enough options. You can even convert it, but even the LKR rates are not that lucrative. So it's up to you all to decide. Only thing is LKR deposit rates are higher than USD or any other rates. So that's it.
I think I've seen a bunch of commercial bank ads on special packages for FDs. Would you care to tell us a bit about that, Hazrat?
Yeah, time to time, based on the liquidity and our appetite, we do campaigns to borrow from the market, basically canvas for deposits as well as to lend to the market. So we had some campaigns. These keep changing. The banks have a meeting called ALCO, Assets and Liabilities Committee, which meets once in 2 weeks, and we take certain decisions based on our liquidity and our appetite to grow our loan book. So we take certain calls. So nothing is permanent. These products and these packages come and they are also pulled back at times. That's how it is.
Right. So right. Excellent. So I thank you for this. I thank you all for attending today. And again, just a quick shout out to our wonderful speakers. So thank you, Nalin, Asiri, Hazrat, Tanushka, and another big thank you to our sponsors, Daily Mirror and Daily FT, as well as our partners, the Rotary Club of Colombo Uptown, as well as the SLASCOM, which is Sri Lanka Association for Software and Services Companies. It has been wonderful having you all here. I just want to brief you, we have a couple of webinars coming up on real estate and the impact of AI on our workforce, particularly to do with finance and HR, because the world as we know it is changing. The future of work is changing. The demographic structure of our country, especially you can see it with the IT guys who are here today and leaving, everything's in a great state of flux. I mean, when Nalin said the rupee is appreciating, that's a statement we haven't heard for how many years? So we're quite keen to keep people aware and keep not only our customers, but the general public at large informed. Thank you all for joining. If there's anything you'd like to address, we'd love to hear it. All right. Thank you everyone for attending. We'll see you next time.
Thank you.
Thank you.
Thank you.